this video, we will be talking about how the market forms different supply and demand zones and how we can take advantage of them. Okay, so these are two general patterns that we can see in the market, and they happen over and over and over again. Of course, sometimes it can be a bit different, and we can go deeper and deeper into these concepts. But we want to keep it simple and explain it simply here. Okay, so if we start, we have to know what are supply and demand zones. So let's make an example here with one supply zone. Okay, so previously the market has been trading up into that level. Okay, so forming higher highs and higher lows. And then we see price coming into a certain region and breaking market structure to the downside. Okay, once it breaks market structure to the downside, this is where we want to be looking for this range. Okay, so this would be the point where we would be validating this supply level. Why? We have a clean break of structure to the downside. So if prices should manage to trade all the way up into this level again, what we would do is to wait for valid entry signals, okay, to potentially sell down, okay, to that level where there's a potential margin for profit. And in these cases are basically when new supply and demand levels form. Okay, usually this is the beginning of a big move down or a big move up. Okay, so with a big move up, it would be the same thing. Okay, so let us put this here. You want to see the market trending to the downside previously. Okay, so forming lower highs and lower lows. And once prices come into a specific region, you want to see the break of structure to the upside. Okay, the break of structure to the upside at this point, this would validate our level where we will be looking for buys in this case. Okay, so just like the potential bearish trend was started in this case the potential bullish trend was started. Okay, so what happens is if prices return to this level, what we will be looking for is rejection of that same level, and then we will enter with the same criteria. Okay, valid stop loss range, and we could put our targets at the next market structure point. Okay, but now let's talk about a different case that price action does. Okay, so let's say, okay, we will keep using this both examples. Okay, so this would be the first case of a fresh new trend, and this of a sell trend, and this of a buy trend. And what we will look for, okay, this is one case of supply and demand zones that you need to know, and the second one is a continuation of that same move. So if price potentially is forming a new impulsive move to the up or downside, it can form supply and demand levels along the way. And if it forms supply and demand levels along the way, we can use these supply and demand levels to take some continuation trades. What do I mean with continuation trades? I will show that here. So let's talk about the sell scenario first. So imagine we have a trade running, it goes to take profit, and it was validated initially from this point. So what we will be looking for is if price action forms lower levels, so maybe a lower high and then a lower low, breaking new structural points. Okay, so in this case it would be breaking new structural points. Then what we can look for is for valid supply and demand levels again. Okay, so in this case, if the impulsive move is down and if we are looking for a continuation of that impulsive move down, what we can do is validate this level right here. Okay, it's still a valid level. Okay, a sell level, still a valid level, and we can use it to maybe take some continuation trades. Okay, so the same as when a potential new trend is started, what we do is wait for prices to retrace back into that level, look for rejection signal or anything else, a valid signal for yourself. We place our stop loss, and what we will do is target the next low. Okay, so this is how usually it moves if prices are forming some new impulsive legs to the downside or to the upside. Okay, so this would be the sell scenario, but let's look at the buy scenario here. Okay, so it's basically the same thing upside down. So what will happen in this case is we see prices trending higher, forming higher highs and higher lows. At this point we can validate new levels. So let's say it's this point. Okay, this point. So if we get some nice retracement back to this level, we could use this zone right here of a potential continuation level to the upside. So if prices should retrace back down to this level at this freshly new created demand level, what we can wait is wait for the same entry signals as we wait on all our trades, look for the same target, and then look to take that trade into the next structural point. Okay, so these are the levels that you want to know on supply demand, especially as a beginner. Okay, so if you are a beginner, just focus on these two levels. Okay, beginning of a new trend and you see price returning back to it, and continuation zones. This will keep your trades much simpler, and so you can get a feeling of your pair in your system. I hope you liked this video. If you watched it till the end, keep a like, leave a like and subscribe, and I'll see you in the next video.
Recording stopped.